Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right. Hope everybody had a good weekend. So first things first, we have moved from the December 2023 S&P Futures contract into the March 2024 futures contract. So if you're newer to this and you hear somebody talking about the roll today, every 3 months, the S&P contract, because it's a derivative of the index, rolls into a new front month contract, just like gold and oil and any other commodity. So the difference between the December contract and the March contract, I think, is about 50 handles. At least it was last time I looked. Doesn't really matter. It's just it's an executive function. It's a forward priced type of thing. All the roll really does, unless you're a spread trader, and there aren't that many of those left on the floor in Chicago, unfortunately. Unless you're a spread trader, it's really just an administrative function if you're carrying a position of getting out of December and getting into March. You're not making any money or losing any money in the transfer except for a very, very small spread. And, for many decades, there were people on the floor in Chicago that made a very good living on that small spread. But now for us, the thing that I do is if the roll's coming, it used to be Fridays, now it's Mondays. I don't know why. I just close out. So we got out of all of our December positions on Friday. We're flat. I don't hold over the weekends anyway. And we just start fresh with the March contract today. I don't like holding over weekends. I'm more of a short-term trader, no shit. But I don't like holding over weekends because there's just way too much going on in the world. And even when the world is kind of quiet, I don't like being locked out of positions. I think that's why over the years, after somebody that did stocks and options and everything else, I naturally gravitated into futures because you're never locked out. The only time you're locked out is over the weekend and holidays. And unless you've really got something going that's extremely profitable, and the chances of you getting stopped out on a Sunday open or limited, it's a very rare situation where I will hold over the weekends. So with the roll being on Monday, it's kind of natural for me, just fresh start Monday morning. So here's the March contract. We're trading 46.58.25. So just as a quick example, we don't have a ton of tape to talk about this morning. There's a whole hell of a lot going on. We'll get to that. So 46.58, 46.04. So it's like 54 handles. So this is where, this is where the December contract is, but now all the volume is in March, and then this coming week. I forget what the exact closing date is on December. Then that contract will close, and we're off and running into another 3 months. The key takeaway, whatever contract you're looking at, is, last point. I don't like using the general ES contract right in the middle of the roll because it just gets gappy, right? This contract is has the front month, and when the front month rolls, this contract rolls. You're much better off, especially this time of you're using the actual front month contract. Because then you can see, look, it's all consolidation is consolidation is consolidation. So we've been consolidating. They tried to hop it up a little bit. We've spent some time now above the 9-day. You can see the 20-day coming up to deal with price as a function of time, not as a function of price, because price hasn't gone anywhere. This week is about two things. You've got CPI tomorrow morning, 8:30. It's going to be big. You've got the Fed Wednesday afternoon. I don't think you're going to see any great big decisions one way or the other until those two data points get dealt with. What are they? What are they not? I think that's going to set the tone for December? Is it going to be some type of low volatility, sleepy time, let's get into January and we'll see what we want to do kind of a thing? Or are we going to be really active, say between the 13th and the 24th, 25th, and right at Christmas? And then do we tone it down into the new year? Or maybe not. Some years we don't. Everybody makes this assumption that the week between Christmas and New Year's is dead. That used to be the case almost universally. But now that we're basically all electronic and on the screens and things like that, it's a lot less predictable whether or not we are going to have a really boring little holiday season or not. But how it acts between Wednesday and Christmas is going to have everything to do with CPI and the Fed. So, as we sit here on the Monday or the day preceding those two events, I do not have a tremendous amount of expectations for a whole lot of movement today. If it happens, great. Let's go. Ready for it? Up, down, I don't care. Just move. If it doesn't, then you have got to not overtrade, hit your number, protect yourself for a couple of days ahead that are going to have some really nice volatility events. Not for you to game, but for you to get involved with when they happen, and get your week handled and get your month continuing to progress. That's all. And if it stays dead, I've mentioned this in the room. I'm going to continue to mention. All the yearly metrics were made a long time ago. We're not performance chasing subscribers. So if this thing doesn't want to move, if you want to have a nice relaxing December, that's why we work hard for 11 months. Okay? We're not clocking in and clocking out here. That's why people want to trade for a living or want to turn this into a second, type of an income stream for them. It's not for you to hyper trade a December that doesn't want to do much and start giving stuff back. I mean, this has been a very dead tape since mid-November. And we're waiting on a couple of big things. But if those couple of big things come and we don't move, well, then you really got to think about how much more trading do I want to do in December? I think it's a legitimate question. So, quick numbers and then I'll shut up. Volume weighted average price, 46.58. This is all March numbers. December's gone. It's over. December contract is over. 46.58 VWAP. Hourly mid, 46.58. Proprietary moving average, 46.57. So there's a whole hell of a lot going on right in this area where price is. We're trading 59. And we'll see how the 9-day holds. We've already taken out the Friday highs, not by much, but by a little bit. What's the high of the day? 66.5 versus 66. Yeah, whatever. Bulls need to progress through the upside. The bears have to start living below the 9-day, not above. And when this 20-day gets up here with CPI and the Fed and everything else, by Thursday morning, if the bears aren't below the green line decidedly, then they are exposing themselves to serious upside pricing between Thursday and Friday. That's where they're at. Okay. Have a fantastic day. Be safe, be healthy, take care, trade them well. It's funny, I thought this would be a short one. Ends up being 9 minutes long, so apologies for that. Grab a cup of coffee and watch it anyway. All right, take care. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.